So let me ask you the first question.
Yeah.
Why investors should hold European equities on their portfolios?
Well, any investor should only hold equities for the long term, and by that I mean at least 5 years or so. And on a long-term basis, some of the European companies that we have available to invest in are terribly good quality companies, operating in a global environment, very, very competitive, and offering goods and services around the world that their customers absolutely need. And as a result, I think some of these European companies are very strong companies. And if you hold them for the long term, then I think you're liable to make reasonable returns.
Could you tell us how one investor should pick the best companies?
Well, at Aberdeen Asset Management, we're very much stock pickers. We never own a company until we've actually interviewed it, until we've met the management and written a full note and really thought about that company, how it's positioned and what kind of business model it has and how sustainable that business model is over the long term. And as a result, we are seeing companies every day. In total, we see over 700 companies across the whole of Europe every year. We could actually see a lot more than that. We could see 1,000 or 2,000 companies a year, but we probably wouldn't be able to analyse them quite with such depth, with such due diligence. So for us, about 500 company notes a year is about right. We've got quite a large team. We've got 16 investment professionals. So we share and rotate all these notes. When we see a company, there might be 3 or 4 Aberdeen personnel meeting the chief executive or the chief financial officer. And we're really getting down into what the company does, how it does it, how sustainable it is. Do we trust the management? Is it well financed? Does it have a long-term future? And then we think about the valuation. And if all those boxes are ticked, well then, yes, we can invest in that company. But on the other hand, if there's anything that we're a bit worried about, well then we'll just put it to one side. We're not forced to own any company in our universe. And that's what every stock picker should do. Really think about the company and try and understand it as an outsider.
Which are your preferred companies? Is there any Italian one?
We do own an Italian company, Eni, the integrated oil company, the energy company. It's a very strong company with some tremendous prospects in overseas markets, etc. It's not perfect by any means, but it's one of the 40-odd companies that we own across the whole of Europe. We don't have specific individual companies that we love so much that we're going to have 10% or so of it in our portfolio. We're looking for a diversification of the types of companies that we own. So yes, we own about 40 or so businesses that we're thinking about owning for the long term. And those businesses could be in any type of industry. It might be an industrial gas industry, it might be an elevator industry, it could even be a financial industry as well. So we don't approach anything with too much baggage and making up our mind before we've seen the company. We allow the company's credentials to show themselves to us. Having said all that, there are 1 or 2 industries which we will tend to believe is a bit more difficult to analyse, or perhaps there's some government involvement as well. And as a problem is government involvement, typically there's lack of rationality of pricing between the competitors. And that means it's just difficult to make a sustainable return on capital over the long term. So 1 or 2 industries, perhaps the airline industry, perhaps the auto manufacturing industry, we would tend to shy away from those types of industries. But otherwise we have a wide spread of industries that we invest in.
Could you tell us more about your team?
Yes, we have 16 investment professionals on the team, varying from old and grey-haired people such as myself with 25 years experience, all the way down to graduate trainees who we have just employed within the company, and we train them up and we watch them as they grow into very mature and competent fund managers. Now, we are a team. This is important to emphasize. We're just not one person making all the decisions. I mentioned earlier that we see a lot of companies and write a lot of notes. So we need a big team. because we have a lot of due diligence to carry out. And it does mean, and we will appreciate this, that there will be one or two opportunities that we miss out on because we have quite a lot of people that we need to take account of their views, and we will come to agreements in terms of our decision making. But we would rather that than one or two individuals making too many decisions and making poor decisions and finding that we've found out that we're invested in a company that does very, very poorly. For us, the investment process is all about trying to reduce the likelihood of having a disaster in the portfolio, which is why we have a spread of talent, a spread of experience, and ultimately it's all about due diligence and working as a team.
So in a few words, which is your strategy nowadays?
Well, our strategy doesn't change. We are long-term investors in businesses. We absolutely see ourselves as owners of that business. We are managing money on behalf of clients, and we want our clients to take a long-term view. We then set about our process, trying to find sustainable business models which will continue to be very effective and competitive over the long term. And once we have those ducks aligned in a row, then we find that we have the opportunity for long-term investment. So that strategy remains, and no matter what happens in the greater world in terms of macroeconomic concerns or short-term worries or momentum or liquidity or whatever, we remain committed to finding the best companies that we can find across Europe and investing in those companies for the long term. And that's what we believe derives shareholder value for our unit holders.
Thank you for your time.
Thank you very much.